Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock and Sensionics SENS stock. We will start off by talking about Palantir's newest collaboration with Alix Partners, which is a fantastic partnership. Then we will discuss if the PLTR stock is overvalued right now or not, and if I'm buying more. Next, we will compare Palantir's AI technology to Nvidia's technology to see which stock will give you the most gains and returns for investing into them. For Senseonics SENS stock, we will discuss Sensionics' approaching earnings report, along with an SENS stock price target, as well as why we can expect a 1000% return on this stock after their FDA approval over the next couple of years. Go and press the like button right now for more PLTR stock and SENS stock news updates. Comment your thoughts down below about Palantir's earnings report and Sensionics' upcoming earnings report. Subscribe if you are new, and now let's get right into today's stories. If you don't know, Alix Partners is a globally recognized consulting firm that has announced a strategic partnership with Palantir Technologies, which is a big data analytics, data mining, and builder of operating systems. In this partnership, Alix Partners will deliver operational consulting services, while Palantir Technology provides their Foundry platform to help enterprises come up with dynamic solutions for complex problems. The CEO of Alix Partners had to say this about the partnership, and I quote, "In today's highly distributed business environment, every industry is at an inflection point. The companies that will endure and ultimately thrive will be those that successfully leverage data to power their sales, operations, customer experiences, and organizations. Palantir's platform is best in class, and together we have created a strategic opportunity to help our clients accelerate talk and analysis into action." The COO of Palantir then had to say this in response to the collaboration, and I quote, "Realizing the value of digital transformation requires a new operating system across the entirety of an institution. Alix Partners' unique ability to drive strategic transformation for our shared client base has allowed our customers to fully realize the potential of Palantir's operational AI platform, Foundry." The quote just goes on to say that this is a very critical partnership that puts Palantir even closer to achieving their overall goals. This partnership will help Palantir's clients in three major ways. The first is to generate new business models based on artificial intelligence software to ensure that the business is operating at peak efficiencies. The second is to help companies overcome critical problems, including supply chain bottlenecks, and it can predict customer behavior before a change in the customer even happens. Thirdly, these clients will now be consulted to help develop new and improved ways of interacting with their customer base to keep them engaged and to bolster customer satisfaction. If we put all that together, Palantir's partnership with Alix Partners is great news, especially for customers that Palantir already has in the commercial space. For instance, Palantir is already involved in over 40 different industries, and with Alix Partners' help, Palantir will be extremely effective in aerospace, telecom, retail, and media companies. By combining Alix Partners' expertise in consulting and their industry prestige alongside Palantir's AI data-driven approach to making decisions, this team is set to do very big things in the future. And while that's great news, now let's determine if Palantir's PLTR stock is overvalued or not. Let's start with the price to earnings ratio, also known as the PE ratio, and we will use the S&P 500 as a benchmark. Now, Palantir does not have a PE ratio because they are not profitable yet, but we will use the forward PE earnings multiple of 124.6, which is too high, especially compared to the S&P 500's benchmark, which is only 20.6, and in this case, lower is better. We also have the PS ratio, also known as the price to sales ratio, which is very important, and the S&P 500 has a PS ratio of 3.15, while Palantir has a PS ratio of 37.7, and again, a smaller number is better here. This is one of the reasons why Wall Street analysts are bearish on PLTR stock, which is why they only give it a $25 price target for the next year. However, I personally agree more with Morningstar analysts that say that the fair value of the stock is worth $28, and I have a personal price target on PLTR that's well over $30. But now let's quickly compare Nvidia, ticker symbol NVDA, to Palantir when it comes to AI technology and which stock is going to give you the most growth. Both of these companies profit from the innovation of artificial intelligence because Nvidia produces high-end computer graphics processing units, also known as GPUs, to process AI tasks, while Palantir uses AI to make smarter business decisions. For fiscal year 2021, Nvidia's revenue grew by 53% all the way to $16.7 billion, with an adjusted net income which also increased around 75% to $6.3 billion, which is absolutely amazing. The reason for this huge increase in revenues is due to people buying new GPUs for mining cryptocurrencies and gaming. Also, as AI capabilities increase, the GPU of a computer needs to scale with this innovation, which further boosted demand. However, there has also been a large setback due to the chip shortage, which has slowed the shipment and making of these units. Analysts project great things for Nvidia in terms of revenues and adjusted earnings, because it is predicted that they will increase them by 55% and 65% respectively for the full year. Palantir, on the other hand, had a 49% year-over-year revenue increase because of how many new government contracts that it had acquired and because of their ever-growing commercial business. Palantir also increased their adjusted operating margin to 33%, which is fantastic news, and for Palantir's upcoming Q3 earnings report, analysts anticipate that Palantir will beat their revenues by 38% for the full year, which is above management's projections on their increase of 30% year-over-year until 2025. Now, both of these companies face value challenges because Nvidia trades at 55 times their forward earnings and 25 times their sales, which is rather high, but still in line with projections that Wall Street analysts have given them. Likewise, Palantir also has value challenges that we discussed earlier. However, I think these are also in line because Palantir is set to deliver over 30% revenue growth year on top of year for the next 4 years. Now, when it comes to AI technology, Palantir is the clear winner because they directly associate themselves with the AI market, which according to Grandview Research is supposed to grow at a staggering 40.2% compounding annual growth rate until 2028. However, when comparing these stocks in terms of safety and risk, Nvidia is the better stock overall due to its diversity, its profitability, and it faces fewer political headwinds, which makes it much safer. However, I personally have more money in PLTR stock because the law of large numbers works against Nvidia, while Palantir could potentially double your money faster. Now let's talk about SENS stock, which is expected to deliver an increase in earnings and higher revenues on their upcoming earnings report on November 9th, which is the same day that Palantir is going to release their earnings report. This report has the capability to impact the SENS stock price short term, and even if we get good news, there is a chance of the stock moving lower. However, an earnings beat is still the best case scenario here if we want the stock to rally. If you didn't know, Sensionics is a medical technology company that develops continuous glucose monitoring systems for people with diabetes, and it's projected to post a loss of 7 cents per share in the upcoming earnings report with a year-over-year change of 30%, and their revenues are anticipated to increase by a whopping 377.9% to $3.68 million, which is absolutely amazing news, and it's sure to get investors very excited. There is a system by Zacks rank that can indicate to us with nearly 70% accuracy how a stock will react after earnings based on how Zacks ranks numbers a stock. The numbers go from 1 to 5, with 1 being the best and 5 being the worst. Going from 1, which is a strong buy, 2 is just a buy, 3 is a hold, 4 is sell, and 5 is a strong sell. According to Zacks ranks, the SENS stock ranks as a 3, which is a hold in their system, so this makes it difficult to determine what will happen to the stock price after their earnings beat. However, because of how volatile the SENS stock is, I would not be surprised to see the stock rally immediately and then pull back later after earnings. I think this will be the case because out of the last 4 earnings report that Sensionics has released, the company only beat expectations once, and it caused the stock price to rally shortly after. Now, I do want to remind you that even if Sensionics misses their earnings, it will not guarantee that the SENS stock price will go lower. Earnings catalysts are very hard to predict, but in the case of their approaching FDA approval catalyst, which is anticipated to be approved next month, the shares are set to surge and rise based on the hype for this catalyst. So even if the stock price falls after earnings and you didn't trade the stock correctly, you will have another chance once the FDA approval catalyst comes around. I also want to add that the SENS stock has a great short-term technical score of 60 67, which means that the SENS stock has traded more positively than 67% of all other stocks on the market within the last month. Likewise, for long-term holders, the SENS stock has a long-term technical score of 69, which is very good because this takes into account the last 200 trading days where the Sensionics stock has outperformed 69% of all other stocks on the market. And it gets even better when we look at Sensionics specific industry, which is the diagnostics and research industry, where the SENS stock has outperformed 88% of all other stocks in their industry. So overall, Sensionics has a 57 score, which means that over all the stocks on the stock market, it's better than 57% of any other stock you can invest in, and anything above 50 is pretty good. But what do you all think? Comment your thoughts down below, like this video right now, subscribe if you are new, and I will see you in the next YT video.